Okay, I think we're all live now. So welcome to our JobKeeper for Tradies webinar. We could have come up with a slightly more inventive title, but here we are. Thank you so much for joining us. You're listening to Chris. This is Chris, the CEO of Good Work. We're really proud to be hosting the event today. We're going to introduce shortly Jake from PwC's AirTax, as well as Peter from Gig Super. So just before we get into the main content for the afternoon, just a little bit of housekeeping. If you could please stay on mute during the presentation. We would love to hear your questions though. So if you have a question during the event, there's a chat box that you can click into, and please enter your questions there. And we look forward to answering them at the end, should we have time. We're expecting today's event to run for about 30 minutes. And if we do have time for questions at the end, they'll take another 10 minutes or so. The other thing is we're on Zoom, and if you click on the top right and use your speaker view, that's probably going to give you the best experience. You'll be able to see the slides and hopefully also hear the presenters and see what they have to say. So what we're going to cover this afternoon is the following. We're going to have a chat about superannuation and how we should be treating that in today's climate. Obviously, some have taken a bit of a hit, and it's something we want to explore. We're going to look at specifically JobKeeper for Tradies, who's eligible, and how you can go about accessing it. And we're also going to talk about wage subsidy for apprentices and for trainees. Just a quick disclaimer that we need to say, all the advice you'll hear today is general in nature. It's not personal tax, legal or finance advice. Should you wish to get personal advice, we recommend you go to the experts. Having said that, both AirTax and Gig Super have offered a free 10-minute consultation post the event. So if you are interested in hearing more from the gents who will introduce shortly, they've kindly volunteered to do that, and we'll send through the information after the event. So here we are, that's me on the left, Chris from Good Work. Good Work is a professional networking app for tradies. We now have 30,000 members who have joined us, and we're seeing tradies build their digital CVs, connect with each other, posting projects and examples of their work. We're seeing them post tips and how-tos, and we invite you to join and participate in the community. Jake, can I introduce you from PwC? Probably people have heard of PwC, but AirTax they may not have. Yeah, it's great to have you on board.
Cheers. No, thank you very much, Chris. And so, yeah, my name's Jake Fennick from PwC. I've been at PwC for coming up to 10 years now, working in the tax team there in Melbourne. And as well as working for PwC, as part of kind of a platform that PwC has developed in AirTax, is a simplified version to help sole traders, probably like yourselves, joining, as well as individuals, lodge tax returns, business activity statements, and also provide some guidance around things like JobKeeper 2, being kind of the most relevant topic that we're chatting to today as well. So, yeah, thanks for having me, Chris.
Terrific. We will catch up with you again shortly. Peter, I'd like to introduce you as well. You're from a newish business called Gig Super. Is that just another superannuation firm, Peter, or give us a little intro into what Gig Super is?
Oh, definitely not just another superannuation fund there, Chris. So hi everyone, yeah, Peter Stanhope from Gig Super. I'm one of the co-founders of Gig Super, and the reason why we've started a new super fund is because, you know, a lot of superannuation products out there are all built on the assumption that you're an employee, I should say, who's going to have contributions made by your employer, not someone who's, you know, responsible for doing it all themselves. And so, you know, rather than everyone having to be financial experts to sort out their super, you know, we thought we'd build a super fund that would make it easy for them.
Great. Well, that's probably a nice little segue into the topics today, and we're going to start with super. So sticking with you, Peter, great to get your thoughts as someone who lives in this industry about how we should think about super and how the tradies should think about super during this time, and especially with everything that's going on.
Yeah, I mean, it's a great question, Chris. Obviously, it's been a incredible time to witness over the last 6 to 8 weeks in particular. And I think, you know, when we think about our superannuation, it's really important to remember that for most of us, you know, we've got a long time to go until we retire. And so that money that you've got in super is a really sort of long-term investment. and to remember that, you know, market corrections happen all the time. You know, before COVID, we had the European debt crisis. Before the European debt crisis, we had the GFC. Before, you know, GFC, there was a recession of the 90s. And, you know, these corrections are a perfectly normal part of what happens in financial markets. There's always different reasons for them, but they're totally normal. So I think it's important to keep that context, you know, when you're thinking about what's happening with your super, you know, and these market corrections that happen. You know, markets have come off, and it's scary when they do come off, although they've recovered a little bit over the last couple of weeks. And there's a real danger, I think, for people in sort of, you know, panicking when they see the markets fall. And whilst that's a very natural, you know, human reaction, it's important to, you know, keep that context that, you know, there's been plenty of these corrections in the past, and plenty of times that, you know, that every time those markets have recovered. So whilst, you know, they're all different, that's recovered. So, you know, it's highly likely that they will this time as well. There's also,
yeah.
Sorry, Chris, where you go?
So, I mean, that's interesting, and that need to try and back your investments in your super fund where possible. That versus the need to take it out early. So obviously we've got a question here about who's eligible to it. Do you want to just take us through how you might consider that, and then who would be able to access it?
Yeah, so this was one of the first bits of the stimulus package that was announced by the government. And I think at that time there was a lot of sole traders that were crying out for stimulus because they'd, you know, really been hurt by the fallout. And so the way it works, and whether you're eligible or not, depends on whether you're a citizen or permanent resident of Australia or you're a temporary resident. So the rules for citizens and permanent residents are that if you're a sole trader and either your business has been totally suspended, or if your revenue has dropped by 20% or more, then you're eligible to make one of these early withdrawals from super. And the way it works is between now and the 30th of June, you can withdraw up to $10,000. And then between the 1st of July and the 24th of September, you've got the ability to be able to withdraw another $10,000 if you need to. And that money, when you withdraw it, is tax-free. So that's the rules for citizens and permanent residents. For temporary residents, it's a little bit different. And some of those temporary residents have been hit really hard because often they're not eligible for things like JobKeeper and JobSeeker. So the rules for temporary residents is basically if you can't meet your immediate living expenses, then you're eligible for it. And for them, they can withdraw up to $10,000, but they've got to by the 30th of June. So they're the eligibility rules. As I say, it differs a bit on your circumstances and whether you're temporary resident. Before you do it, I think, you know, it's important some of the big issues here. And, you know, if you need to do it to put food on the table, look, I mean, that's just the reality, isn't it? But, you know, superannuation is your money. So it's a little bit different to things like JobKeeper, which is obviously involves the government giving you money. So it's well worth exploring those other elements of the stimulus package before you go and have a look at, you know, early withdrawal of super. And if you are withdrawing that money from super and you totally empty your account in the process, then you're going to lose any insurances that you've got within your super. So quite often within super, you'll have, you know, life insurance as well as income protection insurance. And so if you withdraw the whole balance, then you're going to lose those insurances. And then the third one is obviously just the impact that it has on your retirement balance. You know, if you're taking that money out now, then it's not going to be sitting there and compounding over time, which is going to mean that you're going to have, you know, less money in there at retirement if you don't replace it. But, you know, ultimately, if you've got to put food on the table, then, you know, I don't think there's any shame in doing it if you absolutely need to.
And I suppose that replacement's a relevant point. Just because you take it out doesn't mean you might not be in a better position to put some back in the future.
Yeah, that's right. Absolutely.
Okay, so if you are in that position and you need to get your hands on some of your super funds, what are the steps?
Well, I mean, the first step I would take is if you've got a financial advisor or somebody that you can talk to about it, and maybe even an accountant that can help you navigate through things like JobKeeper, make them your first port of call. Once you've decided that, yep, I definitely want to do it, then the process to go about doing it is you jump onto the MyGov website, or you can jump onto the ATO website. It'll take you through there, and you just register. So it's pretty straightforward. You don't need to contact your super fund. You do it through those MyGov website or the ATO website, and it's pretty straightforward. You just put in your details, and then they'll send a message to the super fund to request them to release that money. They don't request any evidence at the point that you request for the money to be withdrawn, but being the ATO, they've obviously got the ability to be able to ask for that evidence, after the fact. So you definitely should be, taking this up or withdrawing this money if you don't meet those eligibility criteria. And one final point there as well is there has been a little bit of there's been some fraud being committed, since this went live a couple of weeks ago, where basically fraudsters have been calling people up and offering to help them withdraw their super and getting their MyGov details and then trying to steal money out of their superannuation accounts. So if anyone out there gets approached by anyone that is offering to help them do this, I'd politely decline that request.
Yes.
They probably haven't got your best interests at heart.
Okay, thank you. That sounds rather nasty. So we're going to jump over to Jake, but as I said at the top of the call, if you do have questions for Peter on super, feel free to drop them into chat now. Over to you, Jake. So now we're going to have a little bit of a chat about JobKeeper. Similar question, I suppose. Who's eligible to receive the JobKeeper payments? And we know that's changing. So how does it look at the moment?
Yeah, perfect. No, thank you, Chris. And it's an interesting space at the moment. I mean, I think when JobKeeper was first released, people were initially struggling to find, I suppose, information to complete their understanding about what it was and how to access it. I think that's come along in leaps and bounds, and there's heaps of publications out there in terms of actually grabbing relevant information to start the process or to continue actually receiving payments if you're already receiving those. But to start kind of broadly, I mean, the JobKeeper program is made up of the $1,500 subsidy per fortnight per eligible employee, and it actually flows to the business, so to the employer rather than the individual. It's available for sole traders, and it's a point that I will come back to throughout the presentation, given that I'm presuming a lot of people joining today are sole traders themselves. But it's an incentive. I mean, it's designed for eligible employees to kind of to help as much as possible for employees to retain employees in general. And so there's some eligibility criteria that's important that we need to jump through first to make sure you actually are eligible to the payments. But as I said, I mean, it's a great initiative, I think, and it's a massive one kind of brought through by the government. And now that there's kind of concrete information out there, I mean, some of the stuff that we'll chat to today. So around the eligibility criteria, so just to, I suppose, some of the key points to touch on. So the business has to be actively trading on 1 March 2020. There's a few like turnover tests that need to be satisfied. So there's a revenue threshold. So for businesses under $1 billion or more, which I'm presuming is the majority of the audience. So your turnover needs to have been reduced by 30%. And so we'll chat about how to kind of measure that, but 30% is what we're looking at in terms of turnover that's decreased. You have to have an active ABN, which is important, as at March of 2020. And you have to have lodged at least one of the following. So that could be an income tax return with sole trader income. It could be a business activity statement. And it could be something that demonstrates basically sales and reporting to the ATO prior to that March 2020. So in terms of how to assess the revenue drop, so as I said, I mean, you can jump onto AirTax and grab some information about how to actually work through this. And I mean, there's some more information on the Treasury website and other government websites out there as well. But to quickly help in working through that. So you can look at your GST turnover yearly. So compare your yearly GST from March 2020 back to March of 2019 and see what the drop is there. You can also forecast out your turnover and look at, I suppose, turnover there as well to see if you're eligible based on forecast downturn too. And then the final point that I wanted just to chat to is eligible employees as well. So what's important, I think, is there's two elements to this. One, I think JobKeeper has been really advertised as you're an employer, you have employees, and you're trying to basically maintain that relationship with the employees. You're trying to keep things going in hard times, basically. And so the incentive is around, as much as possible, to keep those people on the books. And that's where you're an employer that has employees, as we said. I think where this is developed, though, and it's kind of key to what we're chatting to today, is around the eligible business participant. And so there's kind of some clarification around what this actually means, but basically it means that if you're a sole trader and you don't have any relevant employees, you're not actually cut out from the incentive itself, which is crucial to all of this. So if you're out there, you're a sole trader, you're the only person participating in your business, you may still be eligible to receive that $1,500 payment yourself. And so there's some criteria that you can go on and look at, but basically you can't be an employee of that entity. You have to actively engage in business activities, which, I mean, presumably you would as a sole trader, and you can't be receiving any other government financial support as well. So, I mean, there's a couple of things there that I wanted to chat to, Chris. I know it's information overload when it comes to, I suppose, first looking at these incentives and working out if they're applicable to you. But as I said, it's super important now that the information's out there that you make use of the incentives where you can too.
And you may have touched on it, but I'm not sure you did. Just in terms of timing, that's still open for a while, is it, that you can access the JobKeeper?
Yeah, absolutely. So, I mean, you can jump in there in terms of the qualifying period, and we can come to chat to how you can access it or continue to do so as well. But it's absolutely still open for now.
Okay, well, let's move on to the next slide. We're going to have a chat about the wage subsidy for apprentices and trainees. Jake, I'll let you continue on that one.
Yeah, absolutely. And I think just one quick point before we jump to that as well, just around finally with JobKeeper itself, to jump through and basically the easiest way to go about actually accessing it is to go on via MyGov to your business portal, and there's a direct COVID banner as soon as you jump into that you'll see, and you can follow the prompts as well. So I think that's important, as I said, to make sure you've got confidence in doing that. And it's been as simplified as a process as possible to give you the confidence to go in and access it too.
Yeah, great.
Perfect. So I think, yeah, let's talk about the trainee and apprentice subsidy as well. And I think this one is another area where there's been a lot of information. So I just wanted to take a step back initially to clarify what we're actually talking to when we mention this. And to clear up one of the quick questions is, in terms of this subsidy specifically, can you claim both the JobKeeper and this? Basically, Treasury's come out to clarify that you can't claim both. And you can remember some of the kind of the eligibility criteria we chatted to was around, are you receiving any other government subsidy? So for this one, you're picking between the two as to what's most relevant. But basically, it's available for up to 70,000 small businesses and potentially over 100,000 apprenticeships and throughout Australia. So it's another massive government initiative. And so the subsidy in itself is available to basically employers with up to 20 employees who retain an apprentice or a trainee. And so that apprentice or trainee must have been in training with that business as at March of 2020. And there's also some availability for businesses that actually pick up out of work apprentices or trainees as well. But basically what the incentive is that employees will be reimbursed up to a maximum of $21,000 so it's a massive incentive, as we said, for the year for each eligible apprentice. So that's $7,000 per quarter. So there's 3 active quarters, and so the first being, it runs basically from January 2020 until September of 2020. And so you're eligible to grab $21,000 for each apprentice. There's no cap on the apprentices that you can register for, but you actually have to submit an application to ensure that you are eligible to receive that too, which is important. And I think, so one final clarification that I wanted to make as well is that there was some new kind of incentives around. So one, the Australian Apprenticeships Incentive Program is the old program that was kind of looking at all the incentives available to apprenticeships and businesses who have apprentices. And so there was some changes to those rules that were proposed under the IAA. So this was incentives for Australian apprenticeships. And the only clarification that I want to make there is that the subsidy that we're chatting to now is very different to those. They've actually been postponed until 1 January 2021 to, I suppose, avoid confusion of all the subsidies now available. They haven't necessarily initiated that change as yet. So I think that's an important point, that if you've been keeping up to date and you're waiting for those changes to roll through, to know that to avoid too much kind of overload in terms of changes available, the government's actually postponed those changes, like we said, till January 2021.
Okay, and you mentioned, Jake, that some people might be eligible for one or the other, JobKeeper or apprentice. In terms of defining which one you should be, is that something that we can talk to now, or is it a more specific question than that, and it really comes down to the individual?
Yeah, so I think, it does definitely come down to the individual and the business. But you can necessarily be eligible for both. And I think kind of working through the criteria at the top level to determine which one you're eligible for, or if both, is the first really important point. And to actually get involved and to do that. Chatting to a lot of small businesses, it can be intimidating to know whether you qualify or not. But the real struggle is actually working through that, grabbing the information, whether it be AirTax kind of help centre articles, Treasury websites, whatever you can, get your hands on that information and determine as a first step whether you're eligible, and then inquire as to what makes sense under each of those. So you can't claim both. Treasury's come out and said that, but you could qualify for both and therefore can make the decision from there.
Okay, great. Thank you. The next stage, we're going to have a look at any questions that have been posted. As I've been sharing my screen, I can actually see those questions. So I'm going to jump out of sharing the screen. Peter, if you've noticed any come through, or if there's anything you didn't mention during your segment, please jump in now. Otherwise, I'll just have a look.
I've got a clean slate, Chris.
Okay, let me just have a look. Just a moment. We've got one for Jake, I think. Can you get the apprentice subsidy for the period to April and then JobKeeper from April?
Yeah, so great question, and you can. So basically, if you qualified up until from January to April, and then you swapped over to the JobKeeper once that was released, you can actually do so. You just need to make sure that you're not claiming both during the one period, as we chatted to.
Okay, terrific.
Mm-hmm.
A few coming through, just bear with me a second. I might just read this one out, it's a slightly longer one. As invoices were still coming in during April, we didn't have a full 30% decrease in turnover. We're not sure about May and June. Can we tick May and June on the ATO site and wait until we see what happens at the end of the quarter? Can we still do quarter statements, or do we need to change to monthly? That's a question from Diora. Jake, are you able to help with that?
Yeah, so I think, and this one might be, we're offering 10-minute chats as well to cover stuff like this. So it might be one that we could definitely chat to Diora offline about as well. But you can look at forecasts and determine, around that 30% decrease, to actually calculate whether or not you're meeting that. You can forecast out your revenue as to what you expect to receive. And the important point on that is it's looking at total sales as well. So it's not necessarily encapsulating expenses and things. It's just as to whether or not your revenue as a headline figure is expected to decrease. And you can do that either monthly or quarterly.
And a question semi-relevant to revenue, I suppose. Can you clarify what's meant by GST turnover?
Yeah, to that point that I just kind of briefly chatted to there, it's basically sales that are subject. So for most people that are registered for GST, it would be sales that your business is ongoing. That is kind of caught under general revenue, but there's also some more specific guidance if you're after it around, say, non-for-profits or different kind of ways of actually measuring your turnover. But generally speaking, it's your usual day-to-day sales or trading.
Thank you. Just seeing if there's any others come through.
Chris, I have had one come through. I think it may have only come through to me, but I think it's a worthwhile question.
Go for it.
Yeah. And that is, can I get the JobKeeper and put the money from my JobKeeper into super? And then if I do that, does that form part of my contributions for the year? So whilst I can't speak to JobKeeper, certainly you're free to make contributions into super if you are being paid the JobKeeper subsidy. But I don't believe, and Jacob, correct me if I'm wrong, but that would form part of your SG contributions or your employee contributions for the year. If you've got an obligation to pay employee contributions and you pay some of your staff, some of their JobKeeper subsidy into their super, I don't believe that would count towards their SG contributions for the year. Is that your understanding as well, Joe?
Yeah, and I think, there's a bit to unpack there, but generally, I definitely agree. I think chatting to, given that it depends if you're a sole trader and you're taking the cash yourself under the eligible business participant that we chatted to, or if you're an employer then feeding that money through to employees as well. So there could be the variance there, two different elements. One, basically, because once the individual's in, it's the business receiving money from the government to then pass it on to the relevant employee in the first instance. And once that employee grabs that cash is basically normal salary to them. So they could feed that into their super if they wanted to make lump sum contributions. It would come down to purely, I suppose, what makes financial sense to yourself as well. And if your hours are already being reduced, potentially to then use that cash and have leftovers to put into super might work out quite hard in the first instance, but you're able to definitely do that if that's your preference. And then the other point would be in terms of if you're a sole trader and receiving those payments, then you still can necessarily, once you're in receipt of that cash as a business participant, once again, to the point around what you do with that is it is up to you, and you'd have to make sure that you're looking at sort of superannuation caps and everything else when you're making that determination about where to put those funds.
Thank you. We've got a few more questions coming through. I'll just shoot them out and we'll see how we go. Can we ask a question about the stimulus cash boost too? If a company has PAYG and has lodged its MAR BAS and has also lodged BAS statements for the other periods, does it need to have lodged its for the 1920 period, does it need to have lodged its 1819 ITR to get the boost?
And so for that one, so I'm just digesting that question again. So it has lodged business activity statements for other periods 1920. No, so I think, and this could be one, given that we're not talking specifically to the boost and incentives outside of today, I think you can use either. But I think it's important if you are, so you wouldn't necessarily need to have lodged your 1819 tax return. You could use your business activity statements, which capture a lot of that GST sales information too. But I think you would definitely have to look at kind of the specific qualifications of each incentive, because they are quite detailed in terms of the incentive that's relevant for sure.
This question probably feels relevant to a few people out there. Someone started a new business in January. This is James. Still getting a few days a week work, but the amount has dropped. Not GST registered at this stage. It has no idea of profit or loss yet. Extremely confused what's on offer. How would they go about that?
Yeah, so Peter, do you want to chat through the super? Because they'd probably be eligible to both of these as incentives. Yep. So I'm not sure, Peter, if you wanted to chat through the super option as well, and then we can touch on the other incentives as well.
Yeah, so unfortunately, the ATO, as far as I'm aware, doesn't give specific guidance other than to say, if your business has ceased or if it's experienced a drop of 20 or more in revenue. If you're a new business, they haven't issued guidance on that around early withdrawal of super. So I suspect that might be one that's worth firing directly to the ATO to ask them about your eligibility.
Sure. And I think, in terms of so new business and their relevance for the incentives available that we've chatted to around the trainee subsidies or for the overall JobKeeper incentives. So the ATO, similar to what you described then, Peter, is kind of pushed through some new rules relevant to businesses that are in the kind of crux of just starting out. And so there's certain criteria that business can meet. And so you can look at one, it kind of helps to look at forecasted revenue as well as monthly statements. You wouldn't necessarily have a yearly statement that you could compare back to if you're a new business starting out. So as a first kind of check, I would make sure that you're ABN ready, that you were trading as of March. You kind of jump through those first criteria. And if you do, then move on to the specifics around revenue and BAS statements going forward that you might be able to meet and therefore fall eligible at least under JobKeeper potentially. So I think to answer that question overall, you're definitely not excluded if you're a new business. There's just some more specific stuff that you need to kind of look at to make sure you do qualify.
Thank you. There is one more that's just popped in. Government's already flagged a review of JobKeeper based on current uptake. Do you have any idea of what specific areas might be under review?
Yeah, good question. Not necessarily. I think as we kind of have touched on, it's been a real, it's been awesome in terms of an initiative for them to roll this out as quickly as they have as a first step. So, I mean, super proud to be Aussie there's a couple of other kind of jurisdictions out there that have tried similar things and really struggled to grasp the initiative as well as we have. But in saying that, I mean, in terms of the overall take up, and I think it's probably super relevant from the super perspective as well in terms of how many people are actually jumping on the initiatives as well out there. The government, I mean, they won't necessarily undo the good stuff that they've done. But in terms of, say like initiatives around new businesses and all the questions they had initially for those, they brought out kind of some legislation to help new businesses actually access it. So I would say the stuff that they've put forward in terms of the incentives themselves, I don't necessarily foresee changing. I think that would potentially be unfair and they would cop a lot of scrutiny for undoing a mechanism that they've already put in place and then legislated. But in terms of current kind of working through current issues as they arise, they definitely are in that sense operating on the fly to make sure that they can keep up with any kind of the complexity that people are bringing to them, either as tax agents or individuals too. So yeah, sorry, I can't really answer that directly, but it's an interesting one to note that they really do and they are taking on feedback for sure.
I imagine for each of you, this has been an unusual period in terms of everything's new every day almost. I know at Good Work we were producing content early on, and a day later it was almost old and out of date. So I can only imagine how that feels for each of you.
I think you've got to spare a thought for the people in Treasury who had to draft these rules and come up
Absolutely.
with it. They've done an incredible job.
Definitely.
Someone's just seeking clarification. Sorry to repeat the question, but can you clarify around GST turnover specifically? Is it the figure including or excluding GST?
So it would be excluding GST. And so it's sales that are relevant for GST purposes, but excluding GST when you're filing your BAS. And yeah, in terms of the turnover, information around the specifics. I mean, it comes back to what type of business you are and how you've been kind of filing, whether or not that's sole trader income that's been included in your income tax return as an individual, could be one potential. Or it could be then business activity statements that you're actually compiling and registering for GST purposes and completing those, say, quarterly or monthly as well. So there's a bit of variance there, but it should be sales that are GST relevant before GE is included.
Cool. Thank you. I think we've covered most of them there. Really big thank you to the audience for jumping in and asking these questions. We really appreciate it, and it's the first one we've done, the first webinar we've done like this. So thank you for joining us and for participating. Well done to you, Jake and Peter, for managing on the fly to answer some of these questions. I think we'll probably wrap it up. I just noticed one more drop in. Has anyone noticed that? Going to drop in 10 minutes. So, yeah, I think that's the key. So what we'd encourage you to do, we'll wrap it up here today, but if you would like to ask Jake or Peter a specific question, as we said at the top, they've offered 10 minutes of their time to do so. Hit them up. We're going to share all the details post this event, including a recording of this event, if you'd like to go over something and make sure we're clear on it. Yeah, so thank you, gentlemen. Jake, thanks for your time.
No worries. No, thank you so much for having me. And as I said, make sure you're taking up and getting fully informed on these, because they're awesome stuff that's been rolled out too.
Peter, thank you to you.
Guys, thanks very much for having me. Absolute pleasure.
And yeah, cheers again to the network and for everyone who's helped us put this together. We'll sign off. Thanks again.
Perfect. Cheers. Thanks, Chris.
Cheers.
Thanks, Peter.